For years, the crypto world has kind of felt like a digital gold rush, right? Super exciting, full of opportunity, but also, let's be honest, a little chaotic and totally unregulated. Well, a huge shift is happening, especially over in Europe. A brand new, massive set of rules is about to change pretty much everything. So, let's get into it. And that really is the big question, isn't it? With this massive new piece of legislation rolling out, the days of just operating without a clear rulebook are coming to a close. What we're seeing is a real move from that anything-goes frontier to a much more structured, regulated marketplace. So here's how we're going to break it all down in this explainer. First up, we'll get into what this thing called MiCA actually is. Then, we'll look at the new rules for anyone out there creating tokens. After that, we'll cover how crypto businesses can actually get a license to operate. We'll also dive into how MiCA plans to police the market and stop bad behavior. And finally, we'll look at what this all means for the future of crypto in Europe. Okay, so let's start with the basics. What exactly is this new sheriff in town? It's time to get to the heart of the markets and crypto assets regulation, or as pretty much everyone calls it, MiCA. You can think of MiCA as the first ever complete rulebook for crypto in a major global economy. Before this, the rules were a total patchwork, different from one EU country to the next. But now, Article 1 of the regulation makes it crystal clear. The goal is one single set of rules for everybody. This gives businesses that legal certainty they've been craving, and maybe more importantly, it adds some serious layers of protection for investors and consumers.
And when they say comprehensive, they mean it. The scope here is massive. As Article 2 lays out, MiCA doesn't just target one little corner of the crypto world. Nope. It covers the people who create tokens, the people who sell them, and the platforms where they're traded, what they call CASPs, or crypto asset service providers. So the big takeaway is this. If you are professionally involved with crypto in the European Union, MiCA is almost definitely something you need to pay attention to. All right, let's dig into what this new rulebook actually means for the folks who create and issue crypto assets. This is where MiCA introduces some really significant changes, especially when it comes to stablecoins.
So one of the most interesting things MiCA does, right there in Article 3, is split stablecoins into two main buckets. On one side, you've got asset reference tokens, or ARTs. Think of these as being pegged to a whole mix of assets, like a basket holding some US dollars, maybe some gold, maybe even other cryptocurrencies. Then, on the other side, you have e-money tokens, or EMTs, which are way simpler. They are pegged to just one single official currency, like the euro. And this distinction is super important because the rules are different for each one. Now, for anyone who wants to issue these tokens, or most crypto assets, really, this document is the absolute centerpiece. The crypto asset white paper is basically a mandatory disclosure document. If you're from the world of traditional finance, it's a lot like a prospectus you'd see for a new stock offering. And the process is very clear-cut. First, as per Article 6, you gotta draft the white paper with all the required info. Then, according to Article 8, you have to notify your national regulator, send them the document at least 20 working days before you plan to go public with it. And finally, Article 9 says you must publish it on your website so everyone can see it before the token sale even starts. It's a really straightforward process, all designed for transparency. So what actually has to be in this thing? Well, Article 6 and its annexes get very specific. You need to detail who you are, what the project's about, what rights token holders get, and the tech behind it all. But most importantly, you have to be brutally honest about the risks. The paper has to be, and I'm quoting here, fair, clear, and not misleading. And here's the best part. It perfectly shows the focus on protecting investors. There has to be a mandatory warning right on the front saying that the white paper has not been approved by a regulator. That puts all the responsibility squarely on the issuer. Okay, so that covers the tokens themselves. But what about all the businesses that provide services around them? The exchanges, the wallet providers, all of that. Well, this is the next major pillar of MiCA. So first, let's get the lingo down. MiCA calls these businesses crypto asset service providers, or CASPs. It's a big umbrella term that catches pretty much any professional crypto service you can think of. The exchange where you trade, the company that holds your crypto for you, or even the person giving you advice on what to buy. And this right here, coming straight from Article 59, is the absolute game changer. The Wild West days of just spinning up a crypto exchange in the EU with no official oversight, yeah, those are over. To operate legally now, you have to be an authorized CASP. It's a simple, powerful rule. No license, no business, period. So how do you get one of these licenses? Well, Article 62 lays out a pretty long list of requirements. And trust me, it's not a simple checkbox exercise. Applicants have to prove their management team is reputable, they need to have solid internal controls, and they need to hold minimum capital reserves to make sure they're financially stable. They even need to have formal procedures for handling customer complaints. This is all about raising the bar and making sure crypto businesses are run with the same level of professionalism you'd expect from any traditional financial firm. All right, the final major piece of the MiCA puzzle is all about ensuring a fair playing field for everybody. It's designed to go directly after the kind of market manipulation and insider dealing that, let's face it, has given crypto a bad name at times. Now, to really get what they're banning, you first have to understand what inside information even means in this context. And Article 87 defines it very clearly. It's any specific info that isn't public yet, which a reasonable investor would probably use to make a decision. So, for example, knowing that a huge exchange is about to list some tiny token before anyone else does, that is classic inside information. And MiCA's stance on this could not be clearer. This is a direct quote from Article 91, and it leaves absolutely no room for interpretation. The regulation explicitly prohibits any and all attempts to manipulate the market. And Article 91 even gives specific examples of what this looks like in the real world. Spreading false rumors on social media to pump a coin's price, that's now illegal. Or how about placing and then instantly canceling massive orders just to create a false sense of demand, a tactic called spoofing, also illegal. These rules are designed to bring a level of integrity to crypto trading that a lot of people feel has been missing for a long time. So, we've covered the new rules for tokens, the licensing for businesses, and the ban on market abuse. Let's kind of zoom out now and pull it all together to see what the bigger picture looks like for crypto in Europe. When you boil it all down, MiCA brings 4 huge things to the table. First, clarity. We're talking one harmonized set of rules instead of a confusing mess of 27 different ones. Second, it delivers protection for consumers and investors through things like mandatory disclosures and rules against bad actors. Third, it aims for stability by requiring things like capital reserves to help prevent those catastrophic collapses we've all seen. And finally, it grants legitimacy. By creating this framework, the EU is basically saying, okay, crypto is officially a real part of our financial system now. And this all leads to the $1,000,000 question, or maybe the million Bitcoin question. By being the first major economy to create such a complete regulatory framework, the EU has a serious first-mover advantage. Will this clear set of rules attract the best talent, innovation, and capital, and turn Europe into the go-to destination for legitimate crypto projects? Well, only time will tell, but it's going to be fascinating to watch.